Welcome to Simple Crypto Consulting, where we simplify and secure the crypto sphere. I'm Daniel Pace. This is going to be a new segment where we do a periodic news update about what's going on in the crypto industry, crypto arena, the crypto sphere, if you will. So I'll be looking at a couple articles and videos that I find interesting. We'll be discussing those things, and hopefully, at some point, we'll start live streaming this and do a live stream. Without further ado, let's get into the charts. So if we look at what's going on today, Bitcoin's sitting at somewhere around 48,000. It's down 6%. Ethereum's down 6%. All the things are down except stable coins. Yep, everything's down today except stable coins. So everything is a bit down today. Nothing significant in the gaining sphere. So kind of just a sideways day for Bitcoin. But if we zoom out, we can kind of look at what we're on the hourly chart. We can see what we're doing on an hourly basis. We had a pretty big spike up here on the 21st, and sideways action down. Got a little bit of more of a slow spike to a higher high than we were. And now we're down to not quite where we were on the 21st. So the question is whether or not we're in a bear market or not. Hard to say at this point, but I'm not here to give you financial advice. So something of interest is this here. What we're seeing, ETH whales dumping ETH as price slides below 4K. The number of Ethereum addresses holding at least 1,000 ETH has dropped to a 4-year low this week. So this means that these wallet addresses holding at least 1,000 ETH, there are less now than there were 4 years ago. So basically what this is showing, on the data analytics on Glassnode reveal that these whales that are holding more than 1,000 ETH are selling, and then retail buyers are accumulating. Small investors are accumulating. So wallets that hold ETH in small quantities have been at the forefront of ETH's 2021 price rally. The number of Ethereum addresses with a non-zero ETH balance reached an all-time high. That includes wallets with at least 0.01 ETH, or about $40. So that went to 20.31 million wallets, up from 10.6 million at the beginning of this year. So just this year, ETH wallet addresses with any amount have doubled. So ETH wallet addresses that hold at least 0.1 have jumped 6 million compared to 3.6 million in January. So basically, in all, higher retail interest is what we're pointing to. We're looking at twice as many wallets holding Ethereum at any level, up 2x this year, just this year. And it's a trend that doesn't seem like it's going to be reversing at any point in time. So the whales are selling to the retail investors. That's what we see today, and so that's a very bullish sign. So if you're holding ETH, that's good for. I think that's good for anyone that's holding ETH. This article goes on to talk about some more technical analysis, but for the most part, I think this just solidifies the idea that the whales are selling ETH and retail investors are buying it. So I would hold on to your ETH, but that's just me. You don't have to follow my advice. So the next thing that was interesting to me was this article in the Financial Times, why Bitcoin is worse than a Madoff-style Ponzi scheme. And I think I'll let the guy talk for himself. I'm also not subscribing to the Financial Times to read it again, but listen to kind of what he
A
has
lot
to
of
say.
people say that Bitcoin is just a Ponzi. Even economists say that. But I think that's wrong. It's worse than a Ponzi in a couple of key respects. For one thing, in a Ponzi, if there's a run, if the scheme collapses, you wait around long enough, you might get a sizable chunk of your money back. In fact, some 12 years on, 13 years on, the investors in Madoff's scheme are up to 70 cents on the dollar, and it's still rising. Every dollar they put in, they've gotten back 70 cents from the bankruptcy court. What happens if Bitcoin collapses? Well, there's going to be nobody you could go after. You end up with nothing.
Awkward pause.
And I guess that is one possibility, although with every moment in which there is not a collapse, there's the potential for some legitimate use case to come about. And I wonder if you think that's what the bulls are counting on.
Well, Carl, it's been a while. We've been waiting for the use case. Originally, it was going to be a marvelous transaction vehicle. It turns out it's pretty clunky as a way of making payments when lots of people are trying to make payments. There's congestion, things slow
We'll address
down,
this in
it
a
gets
minute.
expensive. It doesn't look like a real good payments mechanism. New ideas are coming down the pike for what it'll get us eventually, but we're still sort of waiting. So I take your point on the optionality, but it's been a while now.
Robert, this is Joanna over here. You make a strong point in your piece about the cost being a lot around the miners and the electricity we're using. There's some that say this is going to go down. Would that affect your argument at all?
Well, Joanne, thanks for bringing that up, because I really want to make the point that there's another respect in which Bitcoin and Ethereum to date are worse than a Ponzi, and that is that they're negative sum games. What is a Ponzi? Ponzi, you take from Peter, you give to Paul. You might cut yourself in for some, but basically it's a redistributive game. With Bitcoin, though, every day there's money being paid to miners by investors. And that money is mostly going up the flue. It's mostly going up in smoke. It's mostly burning electricity, going through machinery. And that's all social costs. That's all loss. So even if you could, in the event of a collapse of Bitcoin, even if you could try to go after the money, a lot of the money, some over $20 billion to date, is gone. It's gone. It's not there to be recovered. And that makes it worse than a Ponzi.
Okay, so it's worse than a Ponzi, right? Okay. I don't really know how to. I'm not going to go through and address all the things. I think if you're into crypto at all, you understand probably more than he does. But biggest point he's trying to make is that it's worse than a Madoff style Ponzi scheme, because even in the Madoff Ponzi scheme, people could go after the money and get it back, right? And he claims that if Bitcoin went to zero, there's no one to go after for that money. Okay, well, that's making an assumption that there's somebody orchestrating all these events. That's making the assumption that there's somebody taking this money and then from investors and then giving it to someone else. But that's not what's happening with Bitcoin. There's nobody taking money from a retail investor and giving it to somebody else. You're buying into an asset, right? Like a stock. And so what happens if a stock goes to zero? Are you going to go after the company because its stock went to zero? That doesn't make any sense. So there's that. Then the idea that the thing that he said about retail investors or investors putting money into Bitcoin and then that money is just gone through like he seems to not understand how mining works, as if it's from what he said, it seems like he's saying that when somebody buys into Bitcoin, that money is going to the miners. Maybe a small percentage of it as like a transaction fee, I guess. And then he's making the claim that because of that, it only pays for the electricity, which is like, right. That's why there's a transaction fee. It's to sustain the network. Um, and so I guess what he's referring to is that, like, okay, so the 75 cents that you spend to send a transaction or something like that is just burned up in electrical costs. That doesn't mean, that doesn't equate to billions of dollars that are lost. Um, the fees are nowhere near that. But I bring all this up to say that Bitcoin doesn't correlate to a Ponzi scheme nearly at all, because no one person is taking money off the top and getting rich off of it, unless everything is a Ponzi scheme. At that point, it really loses its value. Um, so I just thought that was interesting, and wanted to kind of respond to that. The last thing is what I think is like a perfect rebuttal from Michael Saylor, and he released this video. If you can, I'd encourage you to go watch it. Bitcoin the competition. But he has, like, I'm not going to show the whole video, but right around here, right around the 19 and a half minute mark, he says something that I really
30
agree
minutes,
with.
60 minutes, 15 minutes. A lot of people, when these editorials are written in the Journal and the New York Times, I never seen anybody ever say, oh, I spent 1,000 hours studying Bitcoin. Let me break down my problems with it. I never seen anybody say, I spent 100 hours studying it. Let me tell you the 13 problems I have. There are no informed critiques. I have yet to see them. There are uninformed critiques. And what is that? That's the same as your fighter jet slamming into a wall of air faster than the speed of sound, and you get a shock wave, and you get turbulence, and you get heat, and you get sound and fury. And is that a bad thing? It just means we're moving fast, right? We're moving very fast, and we're getting noticed, and everyone has to notice it. Right. When you're asking the spokesperson for the Kremlin, for Putin, whether or not Russia is going to adopt Bitcoin as the national currency, that's not, when they say not yet or no, that's not a negative signal. That's a positive signal. Nobody asked Putin whether they're going to adopt Apple stock or gold or silver or the giant stone coin of the Yap people as currency in Russia, right? There's only one question they're asking them. And they're asking them the question because it's on the table, and that's indicative of the success of Bitcoin.
All right. So, perfect rebuttal by our Bitcoin evangelist, Michael Saylor. Essentially, he's saying the more time you spend with Bitcoin, the less of these talking points really hold any weight. The more you understand what Bitcoin is and all that kind of stuff, you begin to understand how all these things that the government or editorials, they're not being forthright and honest about it. And he's like, there's not really an informed detraction. And so what we see more often than not is detractors who are not informed, or they don't understand how it works, or something to that degree. And so I would encourage you to go watch that whole video as that came out today as well. So these are just some things that came out earlier in the news today. Just a couple little stories. Just wanted to break them down, bite-sized, little tidbits. Ethereum literally doubling in adoption last year. The adoption of Ethereum, from what we can tell, people are purchasing and buying Ethereum. Bitcoin is not a Ponzi scheme. It doesn't look anything like an actual Ponzi scheme, and this just sort of goes to prove that a lot of people who might sound intelligent really don't understand what they're talking about. And Michael Saylor did an exclusive with Bitcoin Magazine, and that is what that video was. So that's some tidbits for the day. Let me know what you think. I will attempt to do this as a live stream tomorrow, so be sure to tune in for that, and leave any questions or comments down below, and let me know your thoughts on anything that was discussed in the video today. Thanks for watching, and I will talk to you later.